Hello friends, today we learn few things on stocks like what is stock market, definition of a stock, meaning of being an owner or a shareholder, debt versus equity, risk taking and many more. This will help you to understand the basic of stock market. So let us start with the very first topic, that is what is stock market. Every one of us have a tendency to save money, right? Many of us also invest our money so that it is saved and also grows as day passes. Now there are various ways in which one can invest like in bank, real estate, FDs, gold and many more. One such way and a very popular way is investing in stock market by buying stock. Stock market is a place where stocks of various companies are traded. You need to have understanding of stock and how they trade on stock market. You can invest your money in stock market by buying good stocks and get return in the form of dividend. Now you will have a question like what are the premium benefits because of which we invest in stock market? You become the business owner without ever having to go to office. You can just sit back, watch your company grow and collect your dividend. If you have trading mentality, then you can trade in stock market and make huge profits. You are your own boss. After having good knowledge about market and its stock, have good observation skills, you can decide on your own when to buy certain stock and when to sell it. There is a huge risk if you panic and take decisions on emotions, but there is also huge profits if you trade sensibly. Stock market has grown a lot over the last few decades. It has become a vehicle of choice for growing wealth. Let us now look upon the next topic, that is definition of stock. The definition is very simple. Stock means share of a company. Now, share in simple English means owning a part of a whole thing. Example, having a part of a bread from the whole bread. When you buy a stock, it represents that you are the owner of the company for that much percentage of shares as stock owned. You claim on that company's assets and earnings. The more stock you buy of the company, the more your ownership percentage increases. Whether you say shares, equity or stock, it all means the same. Let us now move further to know the meaning of being an owner. What does it mean when you say you are the owner of your shareholder? It means that you are the owner of the company in the ratio of shares held by you. You have a share in the company's earning as well as voting rights attached to your stock. You own a tiny bit of every furniture, every trademark and every contract of the company. Earlier, when you bought a stock, you were given a stock certificate. This was a physical proof in the form of paper that you own so and so number of shares of a particular company. In today's digital world, we don't get a physical certificate, but all the records are kept electronically. This makes trading of shares much easier. In the past, a person used to go to the broker with the physical certificates, but now trading can be done just by a mouse click or a phone call. Isn't it made very easy for every one of us? So do you think on investing in stock market? With all this basic information, let us now understand the meaning of debt and what is equity. Debt versus equity. It is possible that you may have a question in your mind that why does a company issue shares in the first place? Why would it be willing to share its earning with so many other people when they can enjoy all the profit by themselves? This is because a company exists for a very long term, and in this many years, it cannot run its business only with its own capital and profit. It needs to raise money at some point of time. Hence, the company does this either by borrowing from someone or by selling a part of the company. Borrowing and raising money is known as debt. This can be done by borrowing from a bank or by issuing bonds. Selling part of the company and raising money is known as issuing stock or equity financing. Let us now look upon what is the risk on stocks. Risk. We generally hear the term risk return or risk return ratio. We also know that investing in stock is very risky, and it really is. there is no guarantee when we talk about individual stocks. Also, there is no compulsion for any company to give dividends. Some companies declare it on regularly, while some don't. Also, the regular dividend giving companies may decide not to declare any for few years. Besides getting dividends, you can make money on a stock only through its appreciation in the open market. But there is also a downside of any stock gone bankrupt, in which case your investment is worth nothing. Even though all this may sound all negative, there is also a bright side. There are greater returns with greater risk. When you carefully trade your stocks, you can earn average return as high as 10 to 12%, which is more than the returns you earn from the bonds or saving accounts. So this was the basic knowledge about stock market and stock. Hope to see you in the next video. Until then, please do good and we'll be back with the next video soon. Do subscribe to our channel and like our video and share it with your friends if you find it fruitful. Thank you.
Dhanashri Academy. Your money, your dreams, our training. Join our courses to learn stock, commodities, derivative market. For more details, log on to www.dhanashriacademy.com. Thank you for watching this video.